Hey everyone, it's Gerald. In this video, we're going to touch onto Adobe stock here. Adobe stock is down nearly 35% in the year. There's a lot of talk whether AI like Midjourney and Sora are killing Photoshop and Premiere. I'm going to address a lot of those bear arguments, whether I think those are valid, whether this company has a moat in the first place, or are they pretty much an existential threat, and this company is doomed for failure, right? So before I begin with this video, once again, my name is Gerald. I've made over 7 figures in the stock market. These are verified profits. I've done it in video format multiple times. I'll show a video format right over here. I'm also registered with the SEC as a large trader. So it's safe to say I know a little thing about trading. I'm not one of those smaller traders who are trading with only $10,000 to $20,000, giving you buy advice here and there. So overall today, I'm going to break down if there's any counter arguments, whether it's just looking at Adobe's financials, as well as just doing a deep dive into Adobe stock, right? Whether AI is essentially supercharging Adobe or are they destroying the company? So stick around to this video. I'm going to go over some of the numbers. I'm going to go over the dark pool data. I'm going to go over its financials in terms of its fundamentals. I'm going to go over what hedge funds are doing and looking at the technicals, of course. So overall, right now, Wall Street, retail traders are all panicking, right? There's the question of whether generative AI is becoming democratized, is it becoming commoditized? Many people are asking, why pay $60 a month for Adobe when you can prompt a video through Sora or whatever AI video or AI software, and you get a decent video in seconds, right? Ultimately, here's the reality here. AI excels at these first drafts, right? They're doing well, but they're not pro workflows, right? Younger creators might dabble into it and be able to create something, right? But enterprises requires layers to everything, right? Versioning, whether it's compliance, all these things that AI alone can't touch, at least for this very moment. So that's one way I would address the counter argument with Adobe stock here. Adobe, I'd say, isn't just a software, right? It's the industry standard, one that's been an industry standard for over 30 plus years. So there's a lot of muscle memory within it. Pros need these non-destructive assets, right? There's a thinking that Adobe is just going to lose its whole market share through AI, but there's also the other side of the things where Adobe is integrating AI, right? Looking at some of Adobe's AI-driven product innovation, there's Firefly, there's Acrobat AI, as well as Gen Studio, right? They're all driving growth for this company that is projected to garner 250 million plus in AI annual recurring revenue by projected by the year end here. You had digital experience growth that grew over 10% year over year with Gen Studio. And ultimately, as of the most recent quarter, the company generated over 10% revenue year over year growth, but priced at a forward PE of 18-19. This is a company, as of its most recent quarterly report, demonstrated 10.72% revenue year-over-year growth, right? So excellent in terms of its revenue growth. A lot of that existential question, whether AI is going to impede on its growth, is being addressed through that. And that's pretty much demonstrated what management itself is saying. Management itself, through its buyback program and even through its earnings report, is stating that the Adobe stock is undervalued, and they've been ramping up their buyback. They're cannibalizing their shares, and ultimately that's going to bring up their earnings per share and overall their financial metrics, right? And overall the stock, right? The stock is trading at a forward PE of around 20 when it's generating 10 plus revenue year over year growth, with a trailing PE of around 18.56. Looking at its historical price to earnings, it's essentially the lowest it's ever traded at, right? Looking at these lower troughs, 27, even 22, if it has some sort of re-rating into this company, or this company is able to have any bullish catalyst in terms of news, the company is going to make substantial growth in terms of its share price, right? Looking at its price to free cash flow, it's also the lowest it's ever traded at, 13.45, so 3 times lower, roughly around 3 times lower than its 5-year median. And even this lower trough here, if it gets back into 18 or even towards 16, the re-rating in the stock price is going to be extremely huge, right? So it's offering limited downside for pretty big upside, right? And of course, looking at these shares outstanding, the shares right now are sitting around 424 million. And overall, you can see the company has been cannibalizing its share count here. Looking at the company's intrinsic value, it's offering a pretty wide margin of safety, right? Intrinsic value is sitting around $514, so offering nearly a 40% upside from current valuations. Even looking at it in terms of its DCF valuation, it's still sitting around 425, so still significant upside. I think it's around 25% from where we're currently sitting at here. Wall Street has an average price target of around 463, which is about a 50% upside, with a lowest, most bearish thesis assuming $280. So about an 8% drawdown from current valuations right here. Hedge funds are essentially doing the same, right? There is 52% that were bearish, in which they decreased their positions or closed their positions. But overall, big super investors that I currently look up to or do look up to are doing the same thing I'm doing, right? We have Bridgewater, Ray Dalio, increased position by 73%. He's down 23%, has a $45 million position into this company here. We have Ken Fisher. He did decrease by about 7%, but has a $1.5 billion position. Jim Simons of Renaissance, killing the market, right? 75% increase in his position, $337 million. John Overdeck with Two Sigma, increased by 5%, has a $247 million. Dodge and Cox, increase bought over 1 million shares of this company, has over $562 million in the stock here. Overall, pretty bullish in terms of some big funds here. Looking at the revenue once again, the company's generating or growing at around 10%. Free cash flow annually is producing $9.6 billion free cash on a trailing 12-month basis, with a 7.43% free cash flow yield here. Net margins, gross margins, these are all excellent for these companies, right? Very high for the industry. And that's what's caused Adobe to be such a powerhouse with this subscription model and whatnot, right? Looking at the technicals here, I'm going to pull up Adobe stock on the daily time frame. We are just extremely oversold on the daily time frame. RSI is sitting around $25 in a key area of demand here. Looks like we have not touched this price level since 2022. So essentially around COVID era, right? A lot of fear during these times of the market. You're in a historical low in the company, both on a valuation basis, as well as just looking at it in terms of price, right? So RSI is extremely oversold. On the weekly time frame, there is a weekly RSI divergence going from price from April 14th here all the way to present day in January 15th, essentially. The stock is making lower lows, higher highs on the RSI, and that's ultimately what I'd like to see, right? That's essentially weaker sellers that are weakening, and overall, a shift in momentum is where I expect, right? Looking at the volume here, we are getting a sell-off that is decreasing in volume, though substantial on the daily time frame, as a lot of institutions most likely are accumulating this stock here. And that's essentially what I'm seeing in terms of the dark pool. So I'm going to pull up the dark pool here for Adobe stock here, and we see 80% bullish prints compared to 20% bearish here. We have a net bull flow of 700 million. Most likely we have institutions who are accumulating this position at this time here. We are at the lower Bollinger Band. There's a heavy institutional flow at a key area of support here. Once again, looking at the DCF values, it's potentially undervalued by nearly 30% and as well as 40%, right? So there's a decent level of margin of safety in this standpoint. Layering in buys is not a bad idea where Adobe is currently sitting at, right? Do I think Adobe is going to reach its prior price to earnings? It doesn't need to, right? It very well could, but it doesn't need to. That's what the positions that I like to look for, where you have those asymmetrical bets, right? Where there's limited downside, higher upside, right? So this is my analysis on Adobe stock. If there's anything I missed, shoot them down in the comments below. I'd love to hear what you guys think as well. Do you think AI is disrupting this company? As always, if you guys can hit that subscribe button, it's going to help tremendously. All I want to do is pretty much help you guys get better in the stock market. So if you guys can hit that subscribe button, it's going to help with expanding the reach and ultimately helping a lot of newer investors. And as always, happy trading. And if you guys have any other questions, or you guys have other stocks you want me to evaluate, shoot them down in the comments below. And as always, happy trading. I'll see you guys in the next video.